In this session, we are going to take a more detailed look at our first inventory valuation method, that being the FIFO, or first in, first out method. Under the FIFO method, when we are issuing materials to production, then we are going to give them the oldest available inventory we have in our stock. And we are going to issue the material then at the oldest available price. So, under the FIFO method, our issues are valued at the earliest price available. Which means at the end of the period, when we are looking at the inventory we have left in our stores department, so our closing inventory, if throughout the period we have always issued our oldest available inventory, then at the end of the period, the inventory we have left, so our closing inventory, will be the most recently purchased stock. So, that is the approach we take then under the FIFO method. Now, let's have a look at an example then of applying this method to our inventory valuation. So we are told, using the following information from Holly Park Limited, produce a stores ledger showing the cost of issues and the closing stock value. Ledgers should be prepared using the FIFO method. Okay, so we have a number of bits and pieces of information for the period. So we have our opening balance. This is our opening inventory. And then we are given a number of bits of information about receipts and issues for the period. Now, receipts are just purchases. So anytime we purchase inventory, we record that as a receipt. And then our issues to production, notice there is no value beside our issues to production, because we need to establish what the value of these issues will be based on our FIFO method. So in a question of this nature, the first thing we are going to do is set up a table. And we're going to record all of the information for the month. So we will have then the date, our units quantity, the unit value, and the total value. These three columns will record the information for our issues and our receipts. Then at the end, we want to keep a running total. So we'll record our remaining inventory units and our remaining inventory value. So all we have to do is go through the information we have been given line by line. So the first thing we were told about was that on the 1st of the 12th, we have our opening inventory, which is a quantity of 300 units with a unit value of 2, so a total value of 600. So we can assume at this point that that's all we have in our warehouse then, 300 units with a total value of £600. So what happens next? Let's look up. We're told then on the 7th of December we had a receipt of 200 units at a unit cost of 220, total cost of 440. We purchased inventory, so this will increase our inventory level. So we'll record on the 7th of the 12th. We have a receipt of 200 units costing 220 per unit, total value 440. So if we add this on now, we had 300 units. We need to add on the 200. So now we've got 500 units with a total value of 600 plus 440. So total value 1,040. What do we have next? Next we have on the 8th of the 12th an issue of 400 units. Remember, if we issue these units to production, we're reducing the amount of inventory in our warehouse. So, on the 8th of the 12th then, we've got an issue of 400 units. So we're reducing the inventory in the warehouse. Now the question is, what value are we placing on these 400 units? Under the first in, first out method, we are going to issue the oldest available units. Now the oldest available units we currently have are our 300 units of opening inventory. So this will be the first 300 units we issue. So we're going to issue 300 units at £2. Now notice that our issue quantity is 400 units in total. So after we've used up all of our inventory, then we move to our next oldest available inventory. And our next oldest available inventory will be the receipt of 200 we purchased on the 7th of December. So the remaining 100 units are going to come from that receipt. So the total value then of our issue, 300 times 2 plus 100 times 220 gives us 820. So if we look at our running total then, what has happened to our inventory levels? Well, we've taken away 400 units and issued them to production. And the value we placed on those 400 units was £820. So we are left with 500 minus 400, we're left with 100 units, and those 100 units have a total remaining value of 220. What happens next? On the 11th of December, we have another receipt. Okay, so this should be straightforward. We just need to add this information in to our existing inventory. So on the 11th of the 12th, a receipt for 250 units. Each unit now costs us £2.50. So the total value of that receipt is £625. If we look at our running totals, before the receipt we had 100 units. We're adding in 250 with a value of 625. So now we have 350 units with a total value of 845. Looking back up at what happens next, on the 14th of December, we issued 200 units. So we'll add this in. Issue 200 units. Now we have to ask ourselves the question, what is the value of this issue? We know we're using the first in, first out method, so when we issue our materials to production, we are going to look at the oldest available inventory. Starting from the top then, we know we've already issued all of our opening inventory, that's gone. So what's next? On the 7th of the 12th, we purchased 200 units. Are any of those units left in the warehouse? Well, yes, they are. If you look back at our issue from the 8th of the 12th, we issued 100 of those units at £2.20, which means there are 100 of those units left in the warehouse. So for our 14th of the 12th issue, he can issue the first 100 at £2.20. So we just need to fill the gap, the remaining 100 then. What's our next oldest available material? That will be the receipt from the 11th of the 12th. So we're going to take the remaining 100 from that set of units, which cost £2.50 each. So the total value of the issue then, 100 by 220 plus 100 by 250 is 470. If we look at our running totals then, we've taken away 200 units and we've given those 200 units a value of 470. So we're left with 150 units with a total value of 375. Next line. On the 17th of December, we have another receipt. So if you're a little bit familiar now with our steps, we know the receipt. It's quite straightforward. We just need to add them on. So on the 17th of the 12th, another receipt. This time, 150 units at £2.80 each, giving a total receipt value of 420. If we add that on to our running total, now in our warehouse we have 300 units with a total value of 795. Our final step then is our final issue on the 20th of December of 100 units. So we have our final issue, 100 units. And what value will we be placing on that issue? Well, let's have a look back. What is our oldest available material? We already issued our opening inventory in full. We have also issued the 200 units we purchased on the 7th in full, so they're gone. Our next receipt then was on the 11th of December. We purchased 250 units and we issued 100 of those on the 14th of December, which means we have 150 of those units left. This is our oldest available inventory, so this is the value, £2.50, that we're going to place on our latest issue. So our issue on the 20th of the 12th will be 100 units, valued at £2.50 each. So total value of the issue is 250. So we're taking away 100 units, the total value of 250. So at the end of the month, we are left with 200 units with a value of 545. Please note that the units we have left are our closing inventory. And the value of our closing inventory using the FIFO method will be £545. Now, just so we're clear on which batches of our receipts these 200 units came from, let's have a look back at what we've done. So we had our opening inventory, which has been issued to production. We bought 200 more units on the 7th of December. That has all been issued in full. On the 11th of December, we purchased a further 250 units, of which 200 were issued to production later in the month, which means in our closing inventory, we have 50 units valued at 250. And the remaining 150 units comes from our most recent purchase on the 17th of December. So our closing inventory then is made up of our more recently purchased units, 50 units at 250 and 150 units at 280. Which had a total purchase value of 420, and our 50 units at 250 gives a value of 125. When you add the two together, that brings us to our total closing inventory value of 545.